How do I adjust my mic? Give me one moment. Okay. All right. Make sure people can actually hear me though. I need to. Oh, let me drop the link too. Damn, where I put it. Here we go. Oh, I can't spell. Oh, what am I doing? Hold on, y'all can't see me, but I'm typing right now. All right, cool. I think we're good to go. I hope, I pray. Can you hear me? Oh man. See, I have to ask, I have to wait, because there's no way I'm going to start talking. Y'all can't hear me. I also don't know how much we're lagging either. Oh, loud and clear. It's lit. All right. Cool. So, first things first, we're just going to start this video off how I really want to start every video off. Trend. Let's look at this. We're going to go really far out and then zoom our way in. So, trend. Okay. We're on the monthly time frame. Boom. Going up. Clearly. Lower than that, looking at the candle closes, we have these joints. Do this every video, but you should really do this once a day to put into context. High, lower high, another lower high, another lower high, another lower high, low, lower low, lower low, lower low. And now we're looking to, boom, attack this low. All right, everybody clear? This is the trend. We're going through the trend on every time frame. So we established, when you zoom really far out, bullish market. Pump, pullback, pump, consolidation, pump. Okay, like we're seeing it. Very good. Weekly time frame for pretty much end of 2017 into this year, most of 2018 has been a bear market. Successive higher or lower highs, successive lower lows. Don't let anybody argue with you. All right, that was the weekly. These are candle closes of the weekly. I'm not going to talk about how I'm not going to use this fucking wick. Zoom in, daily. Let's look at some of the more immediate, clearly down. Anybody telling you otherwise is a fool. What is notable is for this particular downtrend, if you draw a pitchfork, and there's multiple ways to identify the trend. I'll go through the three of them that I have written down for my personal trading style. A pitchfork, usually I would just use just the one pitchfork, caught most of price action, but you have some foolishness occur. Let's see, here, here, right? And then now you see this, but forget this part, don't pay attention to that. Just the two first circles, I saw, okay, I want to capture that price action because we're clearly not going to dump that steeply. So I added the 1.618 fib wing on it, caught this price action nicely, also caught some of this up here that I wasn't catching before. Cool, caught some of this price action, and now we're actually starting to leave it. We're currently still in this pitchfork, right? Just barely, but we're starting to, you can see the bearish trend weakening because we're leaving the pitchfork. And, you know, if you're biased and you have horrible TA, what you're going to do is you're going to see this and you're going to be like, well, shit, I'm going to add the 2 wing on there. We're still bearish. You know, you could if you want. I'm not telling you how to live your life. I'm telling you, if you put the 2 wing on a pitchfork, you're silly. All right. That being said, now we're here in the 4-hour. We've established the trend on multiple time frames. Very largely, it's going up, but unless you only take 1 trade per year, or even less frequently than that, you probably don't care about this view of price. You more so care about the weekly, you know, successive lower lows and lower highs. And you probably care about this immediate down move. We've established that this down move is weakening with the pitchfork. Cool. What are other ways we can establish the trend? We can look at the guppy. I like the 4-hour guppy for looking at time frames of this magnitude. So this was the same time frame we drew the pitchfork on. We're starting to leave the pitchfork. The 4-hour guppy is still bearish. We kind of sort of violated the slow EMAs, but it was a very steep wick. And we're well within the slow EMAs now. So either we flip the slow EMAs on the 4-hour to support, which will probably mark this as a local bottom, or the fast EMAs, which are these blue lines, will decompress and we pump downwards. It's pretty much the 2 things that are going to happen right now. And I mean, that's pretty much the whole debate. Like, is this accumulation or is this redistribution? And I mean, that's the whole point of trading. If you can figure that out to a high degree of certainty, you're going to make more money than everybody else. Because that's the question, right? Is it accumulation or distribution? Cool. So guppy, again, bearish, very similar to the pitchfork, letting us know this bearish momentum is weakening because this is the longest we've ever really played inside of the slow EMAs. Every time we come up to them, we kind of reject them pretty well, and now we're not seeing that same rejection. So that is good if you are bullish. So pitchfork, guppy, other way I established the trend, GANFAM. We went over these before, or GANFAM. I have no idea how you pronounce his last name. You'll go over to your settings, right click on the scale, lock scale, and to be honest, pitchforks and guppies are pretty much good to go, or you can just use like a what are they called? Just a normal trend line. That works too. The GANFAM is pretty, I'm not gonna say it's a gimmick, but it's definitely the one you can live without, okay? But anyway, lock your scale, so no matter if you zoom in or out, it kind of stays the same. Go over here, get the angle, magnet mode, pick a local high, point it down at a 45-degree angle. The local high opposite of what you envision the trend to be. So if you want the trend, if you want to see if the trend's going down, then you'll pick the local high. If you want to see the trend's going up, you'll pick a local low. Put it at 45 degrees. Go over here where the pitchfork is. Grab the fan. Keep it on magnet mode. Clip it right where you click the 45-degree angle. Match the middle 1/1 line with the 45-degree angle. That's your trend. And it's very interesting because this isn't how it looked before. When I drew it, I don't know how I drew it before, but the other way I drew it, we had already violated the 1/1 line. But this is a way to determine your trend. basically, as long as you're below the 1/1 line, you consider this trend to still be intact. If you cut above it, then you close any short positions. And likewise, if we were going the other direction and we were looking to be long, then if we cut below the 1/1 line, we would close longs. So what that would look like is this. Let's say you just pick this local low. And again, all of technical analysis is subjective. So I'm just going to say that now before you ask me like, oh, well, what low should you pick? Whatever low looks like a low, okay? So here, long, and then just because this was so steep, by the time it crossed the 1/1 line, you pretty much gave back a shit ton of profit. So that's why I say the Gann fan is probably the one you can do without. But it's just good to keep in the context and let you know what direction the trend is going. And I lied. There's 4 ways to identify the trend: pitchfork, guppy, Gann fan, and the other one are the 12 and 26 EMAs. This one is really subjective because it really just depends on what time frame. Typically, I use the 4-hour because we get nice bounces on the 4-hour for entries. And you can see trend was clearly going down. Bearish cross up here, clearly moving down. Here we violate a little bit and we're kind of going sideways. Last time this happened, we were going down, violated a little bit, went sideways, kept going down, violated a little bit, went sideways, kept going down. And so, I mean, you may look at this as one of these fractals. Or you may look at this as starting to be like one of these fractals. Again, it really just depends. It's kind of subjective. One thing you might want to do is zoom out if it's ever unclear. The 12-hour makes it really clear. Bullish cross, bullish, bearish cross, bearish, bullish cross, recross. This was, consolidation, going sideways. Bullish cross, trend, bearish cross, trend. And here we are at the EMA resistance, 12 and 26 on the 12-hour. So we expect this to hold as resistance. If you were not in a position up here, you were looking to short, in between here would be a good short. And then if you zoom even further out on the daily time frame, again, bearish cross. Inside here, you could have shorted this wick if you only trade the daily. I don't know what you trade. But yeah, so trend is down. The whole point of me going through all these things is to let you know you first want to identify the trend before you do anything. The trend is clearly going down, but it is weakening, right? So with that being said, let's look at the weakening trend. So here's our consolidation range. Wyckoff distribution. Actually, can I just get a Wyckoff schematic? I don't care if it's accumulation or distribution. All right, both of them. Cool. So let's break this down. And I'm sorry if this, I'm not sorry. If this is repetitive, if you follow my channel often and I've broken down Wyckoff logic, this is good. You just like beat it into your head. It's important. So what you have is the markdown phase. This is called phase A. Where is a vertical line? Here we go. Make it red so you can see it and dot it. Perfect. After the secondary test. Boom. So everything in the pink is phase A. Everything in this red was the markdown phase, right? So for the markdown phase, the next thing you want to look for in phase A for stopping price action is phase A of the accumulation schematic, right? This is looking for PS. This stands for preliminary support. This is when you see in a market that's behavior has typically indicated supply is dominant over demand, and as a result, prices going down, that demand is starting to step in. That is what preliminary supply means. It's initially starting to come in, but the trend most certainly has not shifted. So after preliminary support, you push down into an SC. This is a selling climax. This will be marked by extremely high volume because it is the last exhaustive push down by sellers. This is where you draw a line. This will be one of your support lines. This will indicate where sellers can no longer push price at any point lower than whatever the low is here. You will have an automatic rally, an AR, that will typically have some increase in buying volume, more than what was typical on the left side of the schematic. And that will mark one of your support lines, or excuse me, resistance lines. Then you will have a secondary test in which price comes down and tests the lows near where the selling climax is. Most of the time, you will not go past the selling climax because the selling climax is exactly what it was, a climax, right? It was the furthest point, it was the finale. There's no more selling to be done. And typically, this will form a higher low. That is not always the case. Sometimes the selling climax can go past, or the secondary test can go past the selling climax. That will let you know two things. One, either that wasn't the climax and we're going to keep going down to new lows, or if the secondary test goes past the selling climax, it lets you know, oh yeah, we're going to be accumulating for a while because there's a lot of supply still in here, but not enough to push price down, but certainly too much for price to go up. Then you're going to go back up again somewhere near the automatic rally, and then you're going to set a new low. Oh, actually, this part isn't always true. This is accumulation. So for redistribution, you would literally just take phase A of accumulation and then also put it with phases B, C, D, and E of distribution. And that is redistribution. Same thing for reaccumulation, the other way around, where you take phase A of distribution and then you couple it with B, C, D, and E of accumulation. So what we're looking at now is clearly this was phase A, preliminary supply steps in. Then you have a selling climax. This is the expansive volume I was talking about, an automatic rally, secondary test. A secondary test went past the selling climax on high volume, but it didn't make new lows, so it let us know, okay, we're probably about to go sideways for a good amount of time. Now, you could very well ask, well, Nick, why isn't this part preliminary supply maybe, and then this part is the climax? I didn't like it that way, and it just didn't make sense to me. I'm sure there's more technical reasons I can give to you, but like I said, technical analysis is all subjective, right? It's about painting the picture that you want to paint and being able to justify it, whatever makes the most sense. For me, this made the most sense as a selling climax because this looked like a clear automatic rally based on the demand that came in on these green candles right here. And then this looked like the secondary test to me. This is clearly a sign of weakness, which is actually characteristic of a distribution phase. So the reason this is a sign of weakness is because of the expanding volume right here and the pretty large candle spreads, especially when compared to some of the buying that preceded it. And this volume dwarfed this volume. I'm only using Bitfinex, but I mean, even if you wanted to use this one, which is a combination of like Bitfinex, Coinbase, and Binance, I mean, same story. This volume was still much larger than this volume, right? So this was a clear sign of weakness, and then price did not rapidly move away from this level. It was very comfortable being below 6K. There was still a lot of supply, not a lot of demand rushed into the market, and it moved away very slowly from the bottom of the trading range. Very consistently, but it wasn't like this move. To get from the top of the range to the bottom took 17 hours. To get from the bottom of the range to the top took a day and 14 hours. Right? So this is what we're looking at when we're talking about the market behavior. It is moving down much faster on higher volume than it is moving up. But I do want to give a lot of credit to this bullish push up. It was very consistent, not a lot of pullbacks. Bulls really moved things up, but clearly they were tired by the time they got to the top of the range, and boom, right back in the middle in no man's land. And we can see some of this local volume that bulls and supply is still dominant over demand, or excuse me, bears selling and supply is still dominant over demand. Just looking at some of the local volume. What you want to see if you are bullish, and a lot of people are trying to trade this range, and you totally can. If you're trading this from top to bottom, right? This is a range that you trade. You don't really trade the middle of this because you don't know which way it's going to break. You can say, okay, we were at the top. We're going to reach the bottom. I'm going to short here. Okay. I mean, if you want to, I'm not going to condone that. Yeah, you're not going to get a cosign from me, but yeah, if you want to trade the range, you're going to trade, this. You're going to treat it oscillating. But if you're looking to take a longer trade with a higher rate of return, with more profits, you're going to wait for consolidation to be over, and you're going to look for literally two things: break a resistance, retrace back to support, reach for it, or come down into it, whatever, and then take off. The trick is to get in on the pullback. Bitcoin moves so fucking fast, you might have to zoom into like the 3 minutes sometimes to see a good pullback for an entry. Or you're going to look for a break of support, same thing, pull back, and keep going. That's really all there is to it. And you just watch until then and try and figure out which break looks like it makes the most sense. Because false breaks are either springs, where you have a very quick move downwards, rapid push back up, a test, and then you move to the top of the range, or an up thrust after distribution, same thing but other way, quick break of resistance, push back in towards the trading range, test it, and then go back down to the bottom of the range. And you're going to use volume to determine that, right? Up thrusts will have low volume because they'll indicate not real buyers are coming into the market, or not as many that are necessary to push it out of this range. Same thing with springs, low volume, because they'll indicate, okay, these aren't people really selling. This isn't legitimate price action. It's just trying to shake people out of long positions. So that's what we're going to look at, basically. You see volume at the top of this range was pretty solid. If you're looking at, Weiss wave volume, move up. But then you had this divergence here where you made a higher high with less volume. Clearly that did not work out and we dumped. But you do like the effort given by bulls here, not going to lie. And this individual candle has solid volume. So, let's give credit where credit is due and let's pay attention. There are buyers here. They are present. They made themselves known here during the automatic rally. And now they're showing up again here. So you have to pay attention to that. Where are the sellers? Okay, well, the sellers pushed price down here. They made a lower low here, but couldn't keep it there. And now we're going to see if they can do it again. There's currently support here. We're going to be looking to see if they can break support. Very important. They're pushing down, but do they have enough steam to do it? So these are things that we want to look for. And then once they do break support, or if they do break support, we want to see on what type of volume. The bulls have proven that after all of this dumping, the bulls have proven after all this dumping that they are here and they are pushing things sideways for much longer than we have seen in the past, right? Almost 9 days. Now we have to see, okay, are the bears, still able to take this low? That's what you want to be looking for. So I don't really know if you have any questions. There's no predictions, right? Like, feel free to drop a question in the chat if you have one. But I mean, I'm pretty much done. I mean, we just have to look at what happens as we go sideways. This was phase A. We are currently in phase B. We're essentially looking for characteristics of low volume down here and increased volume up here. Or we're looking at situations of, that was the bullish case. Okay, bearish case. Or we're looking at cases of high volume down here and low volume up here. I mean, that's literally the name of the game. There's not much more to it. And then, you wait until there's a break. Then you make the trade that way. The only other thing I will point out is our history of weekly trends. So I appreciate your stuff. Appreciate you. The only other thing I want to point out is our history of weekly trends. I actually do think this is important. It's something people aren't paying attention to. So, and watch this. This might put you ahead of the game. Not saying we'll continue this pattern, but you want to be aware of this more than you want to not be aware. That is the top. This is the infamous 20K, which we reached on some exchanges. We only got about to 19 point, whatever, something on other exchanges. On Bitfinex, we got to 19.860. But we just rounded 20K because it's like, oh, Bitcoin 20K, cool, whatever. That's the top. Since the top, and since we made our first lower high on the weekly time frame, that we have been following a pattern that nobody is talking about. And I will show you. Purple will represent multi-week down candles. Okay? Stay with me. Let me type this in the chat as I talk. Purple equals multi-week down candles. Okay? Boom, boom. Here's another local top. Multi-week down candles. Here's another local top. Multi-week down candles. 3 of them this time. Here's another local top. Another lower high. Multi-week down candles. What happens after our multi-week down candles? All right, let's pick another color. Let's go with pink. Pink. 1 week consolidation. That consolidation has been redistribution. And we can tell that by hindsight. So there's pink. Here's after our multi-week candle. Boom. Redistribution. Boom. Redistribution. Right? We had one relief, or I'm not going to call this the relief rally. This was just an inside bar. Each one of these candles is contained within the week before it. Here we had a slight deviation, but the bodies of the candles for sure are contained within the week of trading before it. And we finished slightly green, just slightly, with a very small candle body. And then, I'm sure you all get this by now, then what happens afterwards? Orange. Continuation to the downside. Boom. Continuation to the downside. continuation to the downside. Same thing every time. Multi-week down candles, brief consolidation, keep going down, and then we'll just wrap it up with green. Relief rally that always, or so far has always resulted in a lower high. Very simple. Down, hold up a little bit, keep going down, breathe. Down, hold up a little bit, keep going down, breathe. Down, hold up a little bit, keep going down, breathe. Down. So naturally, and this fits squarely within our thesis, our hypothesis that we are going to go sideways, right, in a Wyckofffian redistribution schematic, and then continue this downtrend where we will have a small weekly candle. What is today? Thursday? The Thursday candle just closed, so we're printing for Friday now. And then we have Friday, Saturday, Sunday. So 3 more days. We're over halfway through this weekly candle. And we anticipate a small bullish spread before more downside. I also want to note that this is not a prediction. I'm not saying that this will happen for sure. We could totally consolidate here. This could be accumulation, and we could just, I don't know, we could break this pattern and actually make a higher high. Or we could push up, make a lower high before continuing down. Right? This is not a prediction, but this is what you should do when you're doing your technical analysis. What are the patterns? What is the market telling you it's going to do? Or telling you that it's more likely to do, or telling you that it has a propensity to do, right? Because you don't know what you're going to do. And that's another thing I want to say about technical analysis. Technical analysis is not about predicting what's going to happen next. You don't know. Nobody knows. It's called speculation for a reason. It's a speculative asset. Technical analysis is a risk management tool. It is looking at the left side of the chart to not necessarily predict what's going to happen on the right side of the chart. That's for sure part of it. Technical analysis is about looking at the left side of the chart and determining what you want to do should certain scenarios on the right play out. Like, that is what TA is about. It is about identifying a good entry based on previous areas that price has reacted to. It is about identifying where you want to put a stop based on support and resistance levels, based on what price has done in the past. It is about knowing when you might want to close a position and take profit based on what's happened in the past. Predicting is like what I feel like a lot of people get stuck on. Like, oh, with TA, I can tell you what's going to happen next. It's going to front run the news, which is like, true, but that's like half of the battle, and you're not going to be as profitable as you could by only looking at half the picture. The other half of the picture is understanding it is a risk management tool. The only reason you want to learn what an RSI does is to let you know, okay, I want to trade with the trend. Or if you're going to trade against a trend, to let you know, oh shit, hey, I'm trading against a trend, right? Like that's what TA is about, to let you know how to manage your risk, when to enter, when to stop, when to take profit. So please go forward on that information. On that note, we'll pretty much wrap it up. Check out Crypto Cred's resources. He has a lot about risk management. And I see him pushing that a lot in his Telegram and, Twitter, whatever. He's kind of like stopped telling you about like different strategies and oscillators and lines and trends and stuff like that. And he's like, okay, pay attention to risk management. And good for him, because that's like the most important part of this whole thing. The only reason we learn these things is in pursuit of better risk management. So that being said, I appreciate y'all, man. Y'all drop a like, y'all share it, tweet it, tell a friend, drop it in Telegram, drop it in Discord, whatever. Appreciate y'all, man, and I will see you all later.